Good afternoon, traders. It's good to be back. Hope everyone's doing well. Good. Glad I sound good. Hope the virtual trading floor. I'm sorry. Hope the YouTube is up and running properly. When I go away for some reason, when I come back, breaks. Glad to hear that, Rich. Let me do this disclosure quick. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is pretty different from when I left overall. Some of the positions I was in, I worked out of over the course of the week when I was gone. I've got a new position in Google. I've got a new position in this game, GAME. I usually don't like these 50-cent stocks because I don't think that they move well enough to pay me from a trading perspective. It's almost like you need the real like investment side of it, I feel like, to work. I like names to be a little bit more expensive than that so I can work my cash flow strategies and kind of build in and build out. But my buddy Stefan, who's my fundamentals guy, has gotten me in some really good ones in the past, and he really likes it, thinks it's really cheap fundamentally, and some of the stuff he said I really like. I love a company that's got a buyback and zero debt. I that's something that I like. So 50-cent stock, but they've got a stock buyback, zero debt. And this is what I liked about Path for so long. I don't have a position in this Path anymore. I know it started really running when I was on vacation last week, but I always really liked this Path. I didn't necessarily think it was the greatest business in the world, but no debt. The one I'm talking about is Game Brand, GAME. So new position for me today. Um, so that is the update on that. Yeah, glad to see that Rich is saying that I left everybody in good hands. So big shout out to Brant, Josh, Pat, and any and everybody else who stepped things up last week in my absence. It's much appreciated by everybody. All right, so let's hop in and have a look at today. So spies finished negative, small negative, like 0.1% or so. Q's finished small positive. IWM finished small positive. It was a very quiet day, guys. TLT small positive. Silver's probably the biggest winner out there. This chart looks great to me. We talked about silver in the morning meeting, actually, um, as a potential long. I don't know if anybody bought it. And then Emily on the team had mentioned a silver stock with this PAAS pretty early on in the day. I think when she called it out, it was 45 and change and closed at 48 and a half. So those are probably a couple of the best names out there and best looking charts out there. I think that these have more room to run also. I don't think that they're done yet. So if you caught it today, I would be swinging it looking for a little bit more of a move. Crypto started pretty anemic in the beginning of the day, but then it woke up. It seemed like a lot of the meme stocks in general woke up today. Um, really good strength kind of in the afternoon with like some of these quantum computing stocks caught a little bit of a bid in the afternoon. Some of the rare earth stocks got a little bit of a bid. Things like Open Door, which is up 5% today, caught a little bit of a bid in the afternoon. So it seems like the meme names overall traded pretty well today. Ethereum up 6%. I know BMNR. We looked at this BMNR in the morning meeting today and early after the open. I really liked this. I call this like a bullish consolidation pattern when you're off lows and kind of sitting into this 21 EMA and build out like a nice wedge pattern or flag pattern. I call it a bullish consolidation. It's not technically a bull flag. It's not technically a bull wedge, but the stock went up and then went sideways. So I just call it a bullish consolidation. And then the eight's getting back above the 21 EMA. So all these names kind of woke up today. But so there's a couple okay trading opportunities out there. But overall, from a stock market perspective, it was a really slow day, which is exactly what we were expecting from today's trading session. It's the day before the Fed. The day before the Fed is traditionally a really slow day. By the way, the day of the Fed is also traditionally a really slow day up until 2 o'clock. So tomorrow morning, we will get our normal opening price action, price discovery. But come 10, 30, 11, between that and 2 o'clock, things are usually very, very slow. And, then sometimes we see a pickup in volatility at 2 o'clock. And then if we get a bigger move during the day, it usually starts at 2:30 with the press conference. So we'll see if that plays out tomorrow. I think that the market is pretty much fully pricing in a hawkish cut tomorrow. In other words, the cut's going to happen, but there's going to be some hawkish language from Powell around it, which might not matter because he doesn't have a lot more time left as Fed chair. So we'll see what happens tomorrow, but that could wake things up a little bit. As far as like any lessons I can draw from today, the biggest thing that I would say is something I mentioned real briefly in the morning meeting, and just using myself as an example because this is where it's coming from. It's just really important for traders to know when they're not coming into the day sharp for whatever reason. We are in a performance-based business, right? So the decisions that you make as a trader are very similar to playing sports. The decisions that you make as a trader or the decisions that you make on the basketball court or on the tennis court, they directly impact whether or not you win the game. And it's just important to know if you're sharp or not. The interesting thing about our game is that we've got 5 games a week, all year pretty much, except for the, rare day that the market is closed for a holiday. And, you're not gonna be sharp for all 250 trading sessions of the year. It's just not possible. We're only human, right? You're gonna have the nights where you don't sleep well, you're gonna have the times where you're sick, you're gonna have the times where you're traveling, you're gonna have the times where there's some mental strife going on in your life that is just got you extra stressed or whatever it is. And it's just really important for us as traders to recognize when something's going on and to not overly push risk, not revenge trade, not try to take out, things that might be happening in your personal life on the market, because all that's probably going to happen if you do those is that you're just going to make the situation worse. So, taking it for myself, first of all, just getting back from a vacation. So, in and of itself, when you're just getting back from being away from the market, even though I did trade a little bit every day, I was generally trying to be away from the market. It was not following every headline in the same way that I normally do. When you're getting back from a trip, you're automatically going to be not quite as in tune to the market as you were inherently by taking some time off. There were some charts that I definitely didn't look at for an entire week, and I'm coming back and I'm like, oh, what caused this big gap up in meta a few trading sessions ago? I'm only seeing that right now. Whereas obviously, if I was trading last week, I would have known in real time what was happening. So you want to recognize those things and say, hey, I'm just getting back in the swing of things after taking a step back for a little while. So I'm going to trade smaller today. I'm going to be more selective today. I'm going to trade less today. Or another example is being sick. So I'm having a great combination of both, being away last week and then coming back and getting really sick with like some sort of 24-hour bug, food poisoning, Montezuma's revenge, whatever you want to call it. I was pretty brutally sick on Sunday night when I got home through yesterday. And then even this morning, I don't know if you guys could tell in my voice, like I felt significantly better, but I was just exhausted doing the morning meeting this morning. And I was like, okay, there is no need at all for me to push the action today. Just coming back from a trip, not feeling great, and beyond that, um, today's probably going to be a boring trading session because it's day before the Fed, which, by the way, that's an additional thing that you want to pay attention to as a trader. Not every day, even when you're sharp, the market's not always going to be there for you. The beautiful thing about the stock market is that it's an opportunity creating mechanism. So I like to tell people that it's okay to miss opportunities. It's okay to miss trades. And in fact, it's impossible to be able to capture every single opportunity that the market presents itself. It's just literally impossible. You can't catch them all. Um, so it's okay where occasionally you're going to do all the research for a trade and then you're just going to miss the execution. There's going to be other opportunities out there. But at the same time, certain trading sessions just have much less opportunity than others. And part of our job as traders and part of what we're trying to assess with our morning meeting and our morning research every day is what type of day is today and what type of potential opportunity is it going to afford us? Is there a breakaway gap on the daily chart in the S&P that's caused by macro news that, could lead to a multi-day move here to the upside, and you want to be full blast, max risk, trading aggressively to take advantage of it? Or is this going to be most likely an inside day in front of the Fed with a very tight range, very little going on? We're not in earnings season, so there's not a lot of earnings names happening. Or is it going to be like that? In which case, again, you also want to be trading less. So today, for me personally, it was a combination of so many things. Coming back from a vacation, not feeling well, and also having a day where there's just not a lot that you should be expecting from the market. So with all that combined, there is just no reason to be pushing things. And when you look at the daily candle on the day today, it's a very sleepy inside day on very low volume, not a day where there was a lot of opportunity. So hope that everybody was able to have a good trading session today, and that you took a less is more approach. And if you were selective and picked your spots, there were a few good trades out there where you could have made some money. But I think that the biggest lesson that I can try to impart on the traders on the team today is just know when to trade less. It's a really important part of the business, and that was pretty much my focus for today. Just give me 1 second. All right. Question from you, Vixie Bull. Glad you're back. Hope the time off was restful. Is there anything we can do as traders to quantify when a certain trading day is one of those 5 games a year concept you're talking about just now? Some of my worst days, execution wise, are days where I don't recognize it early enough that it's just going to be a choppy mess. I've personally implemented a size up and down rule with the VIX to try and do this, but this feels like an incomplete answer. Sure. So I like your general thought process. It's going to tend to be that when the VIX is higher, you're going to get larger ranges. Larger ranges tend to breed more opportunity than lower ranges. So on the one hand, that may mean that you want to risk more dollars when the VIX is higher, as kind of a general rule. But on the other hand, you want to remember that when the VIX is higher and ranges are larger, you're probably going to be able to take or need to take less size in order to risk the same amount of dollars because those ranges are higher. So that's one thing you can certainly pay attention to. I like the concept. For me, it's more just based on my pre-market research every day. So, generally speaking, you can have in any given day a range day or a trend day. And obviously, within a trend day, you can have a day that trends up or a day that trends down. And generally speaking, trend days are going to provide a lot more opportunity than range days. And generally speaking, um, uh, trend days happen much less often than range days. I used to know a statistic on it. I honestly don't remember what it was. The percentage of trend days compared to range days, but I really don't remember what it was. I think it was like 1 in 3.5 trading sessions or something like that ends up being more like a trend day, and all the rest of them are range days. So what I'm really trying to do is assess with my morning research, is it more likely to be a trend day or a range day? So what creates trend days? Trend days tend to, there's a higher probability of having a trend day if there is news that the market needs to process and reassess and price in to the market that creates, greater or lesser value for the market, right? Um, and you're gonna trend all day to signify that. Or there is something technical, like a technical break, for example, a breakaway gap. A breakaway gap is when the market gaps above or below a support or resistance level. And whereas most gaps get filled, and I have a whole gap class in the training program that discusses this, breakaway gaps actually have a much higher probability of not getting filled. They have a much higher probability of being a gap and go. And if you think about it conceptually, imagine that there's a resistance level and the market gaps above that resistance level. Well, that means that anybody who was short in front of that resistance level is getting squeezed. So that's buyers. And anyone that is um, wanting to be long, wanting to buy that breakout, they miss their entry and they're potentially chasing in. So you tend to get more continuation to the upside in this example compared to just the normal profit takers that are going to come in a typical gap. So it outweighs those normal profit takers. So I'm basically looking at a combination of news and technicals to try to assess on a day-to-day basis. Does today have a higher probability of being um, a trend day? And then if I think it is, then that's a day that I want to be, significantly more aggressive than otherwise. So um, I hope that helps. That's how I do it. From Jackie, do you ever look back and feel it would have been easier and more profitable to have been long Palantir this whole time instead of shorting? Also, similar to the market short that you took earlier in the year, flipping short too early. Not trying to poke at anything, just genuinely trying to learn from a psychological standpoint how one thinks about missing the earlier move and fighting the trend. I have battled with similar situations when trading money instead of the position and not having a stop get me out when I am wrong. Personally, I find it hard to see the other side when I am long or short a stock market and am fighting the overall trend instead of stopping out and reassessing, which sometimes allows me to get on the right side of the trade. And then I see that there's a follow-up question to that. So I guess we'll start with that. Do I ever look back and think it would have been more easier to uh, be long Palantir instead of shorting it? I mean, that's an obvious answer. Look at this. Look at the chart. So of course, but that's the wrong way I think to ask the question or to provide an answer to it. You can't look back at what something did after the fact and say I should have done this. Obviously, anything that went up, you should have went long, and anything that went down, you should have went short. So there's that. But otherwise, um, would I have gone back and changed anything on Palantir specifically? Honestly, no. I overall, considering what Palantir did, think I traded it really well. I had a game plan for it. I got caught pretty bad in a couple of spots, but always managed to kind of trade my way out of it. I sized down into down moves. I sized back up into up moves. And again, there were a couple spots where I found myself in a little bit of trouble, but I managed to navigate my way through them. Pound it actually, despite being short for over 100% move in this thing, hasn't really hurt me too much. The ones that really hurt me was Sandisk. Sandisk is the one that really hurt me this year, combined to a smaller degree with WDC and STX. And the mistake I made in them is that those stocks all trade together. I shouldn't have been in all three of them. It's one thing to take a loss in one of them, but getting hurt in all three of them at the same time was probably a little bit foolish to have that much exposure to something that is in all kind of in the same sector and going to trade together. So that's more my look back on the year of 2025 and what I feel like I should have done a better job of was just not being all three of those names at the same time. So Sandisk in particular was brutal, but Palantir on the other hand, again there were some times here where it was certainly in trouble. But overall, I traded it really well in those spots, and there were some really big pullbacks in this thing over the course of that too. So if you manage positions properly, you can make money being the wrong way on stocks bigger picture as long as the position management is good. And again, if you look at this thing, it had a pullback from $126 to $66 at a certain point, and I crushed that move. It had this other parabolic move pullback from $189 down to $142, and I was able to do really well with that move. And then more recently, it had this move here from 207 down to 147. I didn't do quite as well on that move, but rode some stock all the way down. My target was 140. It didn't quite get there. So remember, stock went up. It would have been easier to be long than be short, but I'm a big believer in game plans, and that's what I do. I follow game plans. So that's what creates consistency. Um, so, again, I think that the bigger mistake I made wasn't being short Palantir, it was being short SanDisk, STX, and WDC all at the same time. And that's, I think, the worst loss if I can combine those three names that I have over the course of my calendar year. But let me get into the actual gist of the question. Battled similar situations when trading money instead of the position and not having a stop when I'm wrong. Personally, I find it hard to see the other side when I am long or short a stock market and fighting the overall trend instead of stopping out and reassessing, which sometimes allows me to get on the right side. Yeah, so no, I'm pretty happy with Palantir overall. Let me read the second part of your question. How do you deal with a name that you had to take a loss in for money management, then only to see it go right to your target then without you? That's a great question. Do you ever consider getting back in at that point? Do you have to walk away from the name? I had a similar loss this year in my swing account where I knew I was exit liquidity and still had to take the loss from my money management rules, only to see that now the stock is bottomed and it looks like it'll eventually go to my target. Sure. So, um, how do you take a loss from money management and then see it go to your target without you? That just sucks. I've been there before. There's not really anything you can do about it. I think it circles back to having belief in your game plans and understanding that we work in a game of probability. When you work in a game of probability, what it means is anything that will happen, given a large enough data set, anything that can happen will happen. So you're going to have examples where trades work perfectly and you bought the exact bottom and sold the exact top. You're going to have trades where it couldn't have worked out any worse and you bought the exact high and sold the exact low. And you're going to have every situation in between given a large enough data set of trading. And for me, having done this for 15 years now, I feel like I've had every possible situation that can happen. And as I say that, I'm sure that I'll find something new. It just kind of is what it is. But if you believe that your game plans breed consistent profitability, you shouldn't be mad because you got stopped out of a trade for a loss, then it worked without you. You should recognize that that is part of probability. It's part of the statistics of probability, and it's never one trade that matters over the course of a trading career, unless you allow it to matter by doubling down and quadrupling down until you blow up your entire account. It should never be that at the end of a given trading year that you go back and you look at one trade and that was the reason for everything. So when you look at a given trading year or a trading career, it's a series of one trade after the next, one day after the next, and your success is the manifestation of all of those profits and all of those losses combined. And within that, it's not going to matter that you had a couple trades thrown in there where you bought the high and sold the low, that you got out of a trade for a loss and then it worked. It's not going to matter. What matters is the totality of all of it. Whether or not I get back in or walk away from the trade entirely depends on the rules that you have for yourself as a trader. Uh, so some traders struggle with fighting stock, in which case they should have a rule for themselves that if they get stopped out, they walk away entirely. Other traders don't have that problem, and in fact, sometimes other traders will get into a name to watch it a little bit, take a loss in it, and garner information from that trade that leads to a second trade or a third trade where they actually get the profitability. I think that Pat does a really good job of that. especially with some of his counter trend stuff. He keeps it tight, he stops himself out, but then he'll reassess the name, reassess the opportunity, reassess the setup, and you'll see him sometimes get back into stuff, and then that stuff works out really well. So I think that part of the answer to your question there depends on your trader personality, which is something that you need to know, and then you can you know trade appropriately based on that. Hope that helps. From Tate, worse than that fourth quarter Palantir earnings, if you don't mind me asking. Fourth quarter Palantir earnings. If I can't even remember it, it couldn't have been that bad. Fourth quarter of what year? Of 20 February of this year. February of this year. Oh, their fourth quarter. Yeah, that one sucked. Yeah, that one really, really sucked. And I think that this was another one where I was like going on vacation the next day. I always managed to do that to myself. Um, yeah, that was the one that really burned me. And I think I remember I was in trouble, and then I really caught this. Hold on, where is it? Here. I caught this parabolic move on this big day three up, and then they crashed this thing back down and all the way back down. But I was in. It was one of the times where I was in a tough spot, but I never realized any loss on it. Um, which whether that's a good thing or a bad thing, might not. The fact that I didn't realize a loss on it might not necessarily be a good thing, right? You need to assess what you can afford to risk. And this is again why game plans matter so much. Like this is a situation where I was definitely in a tough spot and I was down a lot of P&L back at that peak in February, being short this name, but could afford it to be honest. And um, therefore was actually at my maximum sizing, I think, at that high, right as the thing sold down. So, that's why when I was saying to Jackie, like, I feel like I had a couple spots where I was in tough spots in this thing throughout the year, but was able to manage it really well to, make the money back, and then become profitable at certain aspects of the trade. Um, Really, in some ways, the toughest one for me was the move above 200, but that's because I was losing money in SanDisk and those other names at the same time. Whereas, like back in February 2025, I was losing money in Palantir in a vacuum and was making money in everything else that I was trading. In October, when I was short Palantir and it went on that final run to above 200, that was actually the toughest part for me, not because of Palantir specifically, but because unlike the previous instances where I was losing money in Palantir and making money in everything else, I was losing money in Palantir and losing money in some other names as well. So that was a good bit tougher. From Kevin, how should I think about the impact of time in technical trading? Time is a really important thing when it comes to technicals. I've been working on developing multiple time frame timing cycles to build windows in time for reversals. Do you ever use time as a confluence for a trading decision? Do you use time stops where you exit a position not because of P&L or price level related reason, but because it refuses to follow expected seasonality or has not moved in the same moved or it has not moved in the time a typical setup would move in or against your favor? And then you give me a little bit of a chart here on VLO, it looks like. Um, Yeah, so some good questions in here. Let me go back and dissect this. So yeah, so time and technical trading is a really important thing. I think that a lot of times when you're thinking about time, you're thinking about time in terms of extension, right? So markets work in periods of expansion and consolidation over time, right? And what a consolidation is usually it means that time is moving, but price is not, right? And that's what creates a consolidation. So time has a really important impact on technicals because a bull flag, you could argue, is like a time pattern, right? The stock went up a lot, it got extended, it goes sideways through time for a while, builds out that bullish consolidation, and then you're looking for continuation. So that's one. And you brought up a second important point here about things like seasonality and we describe in our meetings sometimes when we look at market dynamics in conjunction with seasonality, we just sometimes you'll hear us describe something as like a window of weakness, like after a options expiration, you loosen up a lot of positive gamma sometimes that was in the market, and that creates a window. We call it a window of weakness, but really it would be more apt to describe it like a window of potential movement where the potential outcomes to the market increase, right? So I think that you can think about time in really both of the ways in which you're describing here. And it's something that's really important that we pay attention to. So time in terms of how it impacts technicals, and time in terms of market dynamics, these windows of weakness, various aspects of seasonality are all something that is really important. Um, Let me see here if I missed any part of that question. Do you ever use time as a confluence for a trading decision? Um, I do actually. I don't often, but I do, and that's actually something that's probably a little bit newer to me. I know that this year through like the September October period, and it didn't work out very well. But that's where you've got that bigger window of weakness from a seasonality perspective. I had some positions on where my game plan was more or less to work out of being short certain things and size down on being short on certain things by the end of October. And again, this is just a really weird year. I don't recognize your name, so I'm not sure if you're new here to the team or not. If you are, welcome. But this was a really weird year in terms of some of the stuff that kind of occurred trading wise. And September, October, November was really all part of it. We had one of the strongest Septembers ever. October brought on volatility like it usually does, but it was also a really strong October. And then November, which is usually one of the strongest months of the year, was much more volatile. Now we understand the why behind that, right? It was really all market dynamic focused. September was a Fed cut September, a non-recessionary Fed cut September, which tends to be some of the strongest Septembers that you get. And it was only in November, which is much weaker than it would have been than it probably normally is, that you actually triggered some CTA selling from the systematics for the first time. So you got to pay attention to all that stuff in conjunction. Seasonality is something to pay attention to because seasonality is brought on by um, market dynamics that create the um, that create the seasonal effects. But at the same time, just because something happens to happen in the past does not mean that it necessarily has to happen in the future. So those are all things that I certainly pay attention to, and I do trade around. So yeah, I mean that's the answer to the question. Um, with that said, I've never used Elliott Wave in my trading. I see you mentioning that. I generally know what it is. I've never used it. Not a huge fan of fibs either. A fib retracement levels, percentage. Well, let me take that back. I am a fan of paying attention to percentage retracements. I just don't believe in actual fib numbers themselves as being these magical numbers of importance just because that they're found in nature or whatever it is. But time I think is really important overall in trading. Um, Cool, no problem, Jackie. From Tate here. Would you argue those memory moves are unmanageable? Or anything else worth noting you learned from those moves, if you don't mind me asking, whether it's from psychological or execution perspective? I'm not sure what you're referring to, Tate. Uh, would you argue those memory moves are unmanageable? Oh, those stops. Yeah, that was kind of the problem with it. So like the way that I have kind of formulated my general approach to trading in a lot of ways, and I've talked about this in the past, is kind of with that like cash flow approach that I put on top of my trades. Uh, it's helped me be really successful because if I put a trade on and the trade works, obviously I make money. If I put a trade on and the trade, so typically what can happen in any trade, right? You go long a stock. Stock can go up, it can go sideways, or it can go down, right? And what I have worked on over the years of game plan development, and I've imparted, a lot of this information to you guys here of how I trade and what I do into the virtual trading floor over time. What I've kind of been able to figure out for myself is a way where if you've got these kind of three options of what can happen after you enter a stock, it can go up, it can go sideways, or it can go down. Let's say I go long. If it goes up and I'm right, obviously I make money. But if it goes sideways, you're technically wrong, and that's not where I will make money. I will take it all day where I buy a stock because I think it's going to go up and it just goes sideways forever. I will take that all day. That's great for me. I'm totally fine with that. And obviously, if you bought a call option, you're gonna lose all your money, but I'll be sitting there making money while the thing goes sideways forever. And if the stock goes down and I'm wrong, um, I won't necessarily lose money. I might. It kind of depends on the way it trades in which it goes down. The way that I've kind of developed it is if the stock goes down, but the rate of volatility is greater than the rate of descent, I'll still make money. Or if they're kind of equal to each other, then I'll be break even. Or if it just goes straight down, like no volatility, that's where I'm going to lose money. So if you look at like, if you compare the chart of STC to Palantir, sorry, of SanDisk to Palantir. The problem with the SanDisk for me is that it was unmanageable, like for what I just described. Um, there was like no volatility in this. This was just straight up. Yeah. Was there a day here or there where the stock was red? Sure, there was. But this thing was just straight up from $50 to $280 without any pullbacks in here, without any again, like I said before, I'll take sideways all day. I could be, out of the money in the position, and then it goes sideways for 2 months, and I'll be back to break even in it. But without minus a couple small pockets of it going sideways, or like a day here or a day there where the stock went down, this thing just went straight up and it just didn't trade well. As opposed to if you look at Palantir, where I was short, look at how it traded, right? Big ups followed by big downs, periods of more sideways price action. Like I'm gonna end up being fine in this thing, even if it moves very significantly against me on a percentage basis because of how I'm gonna trade it. And on top of that, Palantir has like a lot of, you can't really see it on the daily chart, a lot of like intraday volatility. SanDisk didn't. STX WDC didn't. It's just like they didn't have that like whipsaw action on the intraday that is what enables me to kind of pull out money from the stock over time. And honestly, when I got into those stocks, I didn't really have any experience trading them either, which is another, I guess, mistake. I didn't know the name. I didn't know the personality of the stock, right? Every stocks in some ways are like people. They all have their own unique personalities, and there are people in this world that you're going to find that you get along with really well, and people in this world that you find that maybe you don't like that person as much. And stocks are going to be the same thing. There's going to be stocks out there where that stock's personality vibes very well for the way that you trade, and other stocks out there where it doesn't. And that run in that SanDisk just completely ran me over. There was no way for me to trade it right. There was no way for me to manage it right. There was no sideways. There was no pullbacks. There was nothing, as opposed to Palantir that had just a lot of ebb and flow. So I think that combo of SanDisk, STX, WDC is, I think this was the worst loss of my trading career. If you combine all three names together, it was not fun. But is what it is. Still learning, still improving on my trading, and that's all. So appreciate the questions from John. What price level do you consider loading the boat long on Netflix? I don't follow Netflix super closely. I haven't done like any fundamentals on this thing in a while, so I really don't know. Um, I like Netflix big picture. I think that if I have to own something that's TV related, it's going to be Netflix or YouTube, honestly. But YouTube is Google, so you can't really own that as a pure play. I hate the Paramounts. I hate the WDCs. I have for a long time. They're dying businesses. They're not doing well. Netflix is the one that's just crushing everybody and making all the money, and no one else can compete. Um, so I don't know. Obviously, there's a huge support zone down at 85. So if we could get down there, maybe we could have a look at loading the proverbial boat. But I'd have to do a little bit of a deeper dive to give me more confidence in the name specifically. All good, Kate. I'm just trying to keep my brain moving. My brain's still moving a little bit slow. I slept like a dead person last night after 2 nights ago, I was up all night. Last night, I slept like 10 hours straight, basically. Just like woke up from a coma, is what it felt like. And my brain's been a little slow all day today. But I think we're still coming up with some good answers for the questions. Checking out the YouTube. Katie's glad I'm back. All right, good to see you. Glad you're following in. Steven's also glad I'm back. What's up, Steven? Good to see you, buddy. Funny Shark. What's up, Funny Shark? What is the bottom for Netflix? We're just talking about that one. I got to do a little bit of a deeper dive on this. Big support down at 85. There's not enough extension here to me on the downside for me to get excited. It's interesting, Netflix is tricky right now with the Warner Brother Discovery stuff that's going on, right? Um, Usually we know that the company that does the acquiring sells down because of all the capital outlay to acquire the other company. So they sold Netflix down because, well, they made an offer to be able to buy Warner Brothers Discovery. And the interesting thing is now we're seeing on like Polymarket that I think the odds of Netflix actually getting the acquisition done fell down to 20% or something like that. I haven't seen a recent update on that number. So it's looking less likely like it's going to happen because Paramount came out with a hostile bid at a higher price. And we also know that Donald Trump would greatly prefer his buddy the Ellisons to be able to own CNN and everything else, right? So you've got both the president preferring for Paramount to own it and whatever. So you would think that when the Paramount bid came out, that Netflix would actually bounce back, right? Because now, hey, they're not going to be able to do the purchase, so the stock belongs higher. But the stock traded down further, and that's because the market is pricing in that Netflix will increase their bid further to be able to buy Warner Brothers over Paramount. So we have to see what happens. It's always really difficult in these news situations to try to say, what's a good support level, what's a good floor where I should come in and buy Netflix because the, if Netflix comes out tomorrow morning and they say, hey, we decided that Paramount, you can have it. We're going to withdraw our bid. Then probably the stock immediately snaps back to 102 or something like that, maybe even higher. Very quickly, we're looking at this thing back at 105. But if Netflix comes out tomorrow and they say, "Hey, we're increasing our bid to $35 a share on Warner Brothers," then the thing probably goes down to 90 off of that. So you're kind of creating a news-based situation, which makes it more difficult. And I can't tell you, what the future holds in terms of what Netflix is actually going to do here. But I can tell you again, 85 is a huge support level, and at that spot, it's probably worth taking a look at this thing regardless. But going forward for tomorrow, is this thing going to be up or down? Probably depends very heavily on what the latest update is on Netflix going after Warner Brothers. So I hope that helps, Mr. or Mrs. Funny Shark in the YouTube. Uh, back over to the virtual trading floor. From Kevin, you mentioned before that you do use fundamentals in your trading. For shorter term swing trades, how would you implement it? Looking at short interest, buybacks, float, for example, would buying defense stocks today with a technical setup in anticipation of war or higher defense spending qualify as a fundamentally oriented trade? The answer is yes. Or is that type of news priced in already? How would you tell if it is not priced in outside of the technicals? Thanks. Yes, I mean, um, when I look at technicals, I break sorry, fundamentals, I break them down into uh um like qualitative and quantitative fundamentals. So a qualitative fundamental is more like the story. Um and I would probably throw, some things like float buybacks and short interest in that. And then when I think of quantitative fundamentals, I think about balance sheets, EPS, forward EPS, all the fun ratios that you can look at. I am not like a big balance sheet fundamental guy. I don't have a oh man, my brain's still a little bit slow today. Whatever that license is, we're gonna take those three tests. Uh, it's like the equivalent of an MBA. You got to take the three exams. You got to learn all the fundamentals. You guys know what I'm talking about. CFA. I don't have a CFA. I have got some basic knowledge, obviously, because I've been trading for a long time. But usually, I like to think more about these like qualitative fundamentals. I like to know, you know, like thinking about. You hear me talk about Google versus Meta a lot recently. Well, this is very simple, right? One, you can see it in the technicals, the Google technicals versus the Meta technicals. But two, it's the qualitative fundamental story of how Google is doing a great job on the AI race and Meta is not. I didn't get to read the full article yet, but Bill posted in the VTF earlier today this article from CNBC, from llamas to avocados. Meta's shifting AI strategy is causing internal confusion. I mean, this is what I call qualitative fundamentals, um, where you just have an understanding of, hey, this is what Meta's trying to do and they're not doing a good job of it, versus this is what Google's trying to do and they're doing a great job of it. Also, plus, let me find that technical bull flag. So it's like you said, you still have to have the technical confirmation, and you still have to have the technical setup. But when you can understand the story behind it, for me personally, that leads to a higher conviction trade. A higher conviction trade means I'm willing to put more risk on it, which means more reward for when and if I'm correct on it. And then, I do also like to pay attention to just float, short interest, things like that. I'm not sure where I would characterize that. It's not really qualitative. I don't really characterize it as quantitative either. It's just kind of I don't know. I got to come up with a term for how I describe that. The dynamic of the stock itself. I'll think about it. I'll think about it when my brain's back to firing on full cylinders. But yeah, I hope that helps. And I would also say on top of that, that there's something to in the way that a trend exists, which is a pattern of higher highs and higher lows, or lower highs and lower lows. But really, what it is a feedback cycle of buying leading to more buying, or selling leading to more selling. Um, I feel like there is some degree of like momentum that happens with that type of positive qualitative fundamentals, where stock in motion tends to stay in motion, to steal some things from physics, where when they're doing things correctly on that fundamental side from that story perspective, you can usually see it in the technicals, but they usually kind of continue to do that, right? Like, you don't just lose that momentum overnight, and that helps, I think, lead to continuation in the price action. So hope that helps, Kevin. All right, guys. Thanks, Jewel Ski in the YouTube. CPA is the accounting one. CFA is Chartered Financial Analyst. That's what I was thinking of. All right, I'm gonna wrap it up there, guys. Have a great night, and I'll see you all tomorrow.